Hello, Professor, and to everyone. We are Group 1, and my name is Mabul Hassan. So, I'm going to present about internal controls. So, first of all, I will talk about what is internal control. Internal control comprises of the plan of the organization and all the coordinate methods and measures adopted within a business to safeguard its assets, check the accuracy and reliability of its accounting data to promote operational efficiency. So there are seven principles of internal controls which they are working. So the first one is establish responsibilities, maintain records, and ensure assessed by bonding key employees, segregated of duties, and mandatory employee rotation, split related party responsibility, and use technological controls. And the last one is perform regularly independent reviews. So these are the principles which are used for internal controls. So now as we choose Intel Corporation company for our presentation. So in my part, like internal control, I will describe the whole process of internal controls related to Intel Corporation. So these 3 points, the first one is evaluation of disclosure controls and procedures, management report on Intel control over financial reporting, and the third one is limitations on effectiveness of controls. So the first one is evaluation of disclosure controls and procedures. Like the Exchange Act of 1934 as amended, effective to provide reasonable assurance that information required to be disclosed by us in report that we file or submit under the Exchange Act is recorded, proceed, and summarized, and accumulated and communicated to management. Reported within the time period specified in SEC rules and forms, and is accumulated to and communicated to management. And the last one is timely decision. So our principal executive officer and principal financial officer as appropriate to allow timely decision regarding required disclosure. So the next one is management report on internal control over financial reporting. The first point is management responsibility. So management is responsible for establishing and maintaining adequate internal control over financial reporting. And the next one is based on our assessment. Management has concluded that our internal control over financial reporting was effective as of the end of the fiscal year to provide reasonable assurance regarding the reliability of financial reporting and the preparation of financial statement for external reporting. And the last one is review the result. So we review the result of management assessment with the audit committee of our board of directors. So the next one is changes in internal control over financial reporting in Intel Corporation. So there were no changes to our internal control over financial reporting because these are reasonably like to materially affect our internal control over financial reporting. So now the limitation on effectiveness of controls. So these are the points which will cover the limitations. The first one is management detect all error and fraud. Management included the CEO and CFO does not expect that our disclosure controls or our internal controls, our financial reporting will prevent or detect all error and all fraud. The next one is design of a control system. The design of a control system must reflect the fact that there are resource constraints and the benefits of control must be considered relative to their cost. Because a control system, no matter how well designed and operated. The next one is inherent limitations. Uh, the inherent limitation in all control system, no evaluation of controls can provide absolute assurance that misstatement due to error or fraud will not occur, or that all control issue an instance of fraud. Because these inherent limitations include the realities that judgments in decision making can be faulty, and that breakdown can occur because of simple error or mistake. The next one is assumptions about the likelihood of future event. So, the design of any system of control is based in part on certain assumption about the likelihood of future events, and there can be no assurance that any design will succeed in achieving its stated goals under all potential future conditions. And the last one is evaluation of control. Projection of any evaluation of controls effectiveness to future periods and subject to risk. Over time, controls may become inadequate because of changes in coordinations and determinations in the degree of compliance with policies or procedures. So this is the end of internal controls.